Hi everyone, welcome to today's video. In today's video, we'll discuss how to select good mutual funds for you. Now, why to go with mutual funds, guys? Firstly, let's answer this question. If you are doing intraday trading, okay, you don't really have time to go with the stocks, also stock research. Alright, if you're doing some other business with that, just like me, because I'm not relying completely on markets for my income. I do have got other talents also. I have got products listed on e-commerce websites. I have got my own e-commerce website. I also read horoscopes. Okay, that is one of my talents. Okay, I've got multiple talents. I also sell gemstones and I do have jewelry business also. So I have got multiple income sources. Okay, I do not completely rely on the market, because if I start relying on forex trading, for example, for my bread and butter, then I will take bad trades. Okay, so I end up blowing my own account if I do that. But if I am very much relaxed because everything is taken care of, I'm making a lot of money through other sources, then I don't need to worry about this. Okay, and let's suppose I make money from this also. What I will do now? Do I buy stocks and lose it all? Okay, of course not. I want an instrument that should not lose its value. For example, if you buy a physical asset, let's say you buy a house, you buy a plot, okay, so that plot is not going to lose its value. Okay, of course, you're not going to check the plot's value every single day, but over the period of time, it will definitely rise. Okay, in this particular instance, we are looking at the mutual funds. Okay, I do have a small portfolio. This one, I do have some other portfolios where I've been investing from last 3 years. This one is just a recent portfolio that I just made, and I added these funds like ICICI Prudential Multi-Asset Fund. It has generated 3% return. IDBI fund has generated like 2% return. PGIM has generated like 7.29% return because it's mid cap fund. Okay, then you have Quant Absolute Fund or at 5% return. Do not look at this figure, just look at all of them are positive, whereas the market itself is really going up and down, and these funds are consistently generating good profits, and my SIPs are also doing good, because whenever I'm buying, I buy at a different NAV. Okay, I buy sometimes when these funds are down, sometimes I buy when they are really down, sometimes I buy when they are really high, and overall the average comes down to be really fine. Okay, so if you see at this particular screen, you will see on the moneycontrol.com, you can look at the Indian mutual funds. Indian mutual funds are absolutely good. Okay, so like here you can see Quant Absolute Fund, which is my fund. If you see its comparison with the Nifty 50, in last 2 years it has generated more than Nifty 50. Nifty 50 has gone up by 36% something, and this has gone up by 46.47%. Okay, so that is a really good return. In last year itself, Nifty 50 generated like 2.69%, and this scheme has generated 15.38%. Now, what do I look for before selecting a mutual fund? I look at these values also. I look at the consistency of the returns, which is very important. I look at the CRISIL rank. So if the rank is very low like this fund I highly avoid, like Navi Equity Hybrid Fund, and the fund has generated 11% return in 2 years. Now, this is nothing, guys. You can make more money by investing directly in the fixed deposits with your local bank, and that bank itself will give you like 5.5% in India. Why to invest in mutual fund and take risk if you are making the same money as what the bank will offer on the table? Okay, of course you want something like 20%, or something like 15% per annum. Okay, and these funds have capability to produce such a marvelous return. And let me show you some other instruments also, like equity fund will definitely give more return in long term. So if you see the large and mid cap funds, you'll see Quant large and mid cap fund has produced 25% in 2 years. All right, so the bank would give like 10%, and this fund has given like almost like 1.5 times what the bank will offer on the table. Okay, so that is how mutual funds work. They work with a huge team. Okay, so they don't have one person taking regular trades. They have got the hedging activity going on. Okay, so that's why you can't beat them. If you can't beat them, why to go against them? Okay, so let me give you an example of stock. SBI. So that's Indian PSU Bank, okay, government bank. a lot of people were saying, a lot of analysts were saying buy here, buy here. Okay, so this was last year Diwali time. Everyone said buy this stock. Okay, so this went all the way up to 542. Okay, people bought from here, they accumulated here, and the retail was thinking it's gonna go up. It went down. Retail is currently thinking, oh, it's just fine, it's gonna go up, it's gonna go up. Reason why it's going down is because the big players are exiting here. They wanna accumulate, but not at this price. They wanna accumulate somewhere right here, because they missed this trend, for example, or they had this trend and they want to now book their profits, and they want to exit it for a while, and they want to come back when it is at a lower price. So they will exit here, and it just keeps on going down every single day. Went up a little bit, then came down. Retail must have been stuck here, because retail was thinking, oh, this is a base now, I think it's gonna now go up. So they bought right here and then again got stopped out. Okay, and retail investors don't really have control on their emotions, and investments like these are going to make them really miserable in the market. You can see double top pattern, almost double top pattern, and this is when it went down again. Okay, so market reacts to multiple things, like there was a war going on in the early part of this year, Ukraine and Russia. Okay, so that kind of international problem will lead to the stock prices go down. But mutual funds will do what? On the other hand, they will have the hedging. Okay, so they will have a lot of research activity. Okay, so they will prepare for such crash. Okay, retail traders can't do that because they don't have the buying power. Okay, mutual funds, when they put money in the market goes up, the index goes up, the stock goes up. So why to trade against them? That is my normal question. For example, if you love this stock, if you love Reliance, and you think like this is a good price of buying it, which I believe it is turning out to be in a good zone to buy, you may can ride this trend, but only up to the first and second resistance. That's all. You retail traders, they wanted to go up, they wanted to go up to 3000 in a matter of few days. It's not going to happen like that. This is a weekly chart. It's just going to go up slowly, steadily, like up to 2700, and people are going to book profits, and it's going to come back to 2600, then it will go up to 2800, and then it will sharply come down. If you want to do options trading in this, and you have a plan, and you are option seller, you can go ahead with that, because stocks are really good for option selling. Okay, and if you have a planning, you have the training, and you also have the account size for that, you can go with the option trading. But I like to do intraday options trading. Okay, so in the next video we'll discuss about the same. In today's video, the idea was to give you some motivation for mutual funds. Mutual fund industry is good. You can rely on them, and you should take financial advice before making any decision. Thank you so much for watching this video. Catch you in the next video.